Let's welcome on board Samir Arora as well, founder at Helios Capital. Samir, hi, good to be speaking with you. I'm sure you're happy today looking at the portfolio, as is, I think, rest of the viewers as well. If you're a bull, you are all smiles ear to ear right now. But do you think this is expected to last? Because do you think this is just a short-term, euphoria that we're seeing in the market, or do you see that the duration could be longer as well of this euphoria?
No, it will be longer for sure. First is that today you are looking at it as if the market is up 3.1%, and I am looking at it as if it is up 1.5%, because every other Asian market is up 1.7%. Whether you look at Hong Kong, Korea, Taiwan, all of them are up 1.7%. So if they can be up 1.7% without any new news, we can be up 3.1, which means additionally only 1.5%. Just joking, but the bottom line is that this is a big event, and the FIIs who've been selling for the last few months are not going to sell like this anymore, and therefore you will be in a sweet spot where domestic guys are buying and foreigners are trying to build back their positions. They are, forget about if they have sold and are now buying back, but there will be many investors who are waiting for this event to be out. Why did they want this event to be out? Because that's just the nature of these institutions who don't want to be embarrassed in month one that they thought of something and then something else happened. So they try and cover all their angles, and because of that, they generally
policy continuity, and that should give a fillip to the FPI flow. So in that regard, Samir, 25,000 on the Nifty before Diwali or maybe year end?
So 25,000 means how much percent? I talk in percentage. I never exactly even know what the level of Nifty is. I talk in percentages. And in percentages to make for at an index level, Nifty might do a little less well than say 500, but broadly plus minus. But broadly speaking, to make 10% from here to year end is not wild. Yeah.
Okay, so it's 25,000 is just about 7%, so 10% is a good margin of safety there.
Yeah, it's a very good number. It's up around 10% so far this year. I'm talking about the 500. And so another 10% can easily happen. And I think a large part of that might happen this month. I think this month will be up another 3-4% till the month is over. Then budget time, there'll be nervousness if they are, if the BJP gets or the government gets overconfident and say that let's put in some capital gains, tinker around with some of those things, that may be a bit of an overhang which we'll have to overcome. But otherwise, yeah, it's good.
So, Samir, how is it that you make the most of this next 10% move, which you're so confident about? I mean, is it fair to make a demarcation now, invest more in large caps, profit take from SMIDs, because they are the ones which have already sort of ballooned up and people are questioning the valuations that some of those are quoting?
So, the first level obvious moves have happened today, which is PSU and some investment related and infra related. And therefore, we come back to this sector we have always had, which is financials. Because, see, there are two groups. One is the Indian economy related, reforms related, policy related. And those are the ones which are going up today. And then there are those which were anyway doing badly and will not be in any way positively affected by the fact that BJP government has come back, which is the IT sector or anyway a little bit of the pharma sector, because those are A, unrelated, and B, relatively therefore will do badly, and they are. And then there is the third sector, the financial sector, which doesn't have direct implications, or the policies don't have direct implications, but they end up being connected with everything in life, whether it's the Reserve Bank of India giving a high dividend, or the fiscal deficit being lower, or anyway growth in various sectors where they can do some form of financing, and which has not done well recently, but historically has done well. And so we think financial sector is good. We are putting our investments in that, in the sense that it's already the biggest weight in our diversified funds. And we have even launched a financial sector fund. I'm not plugging the fund, but I am plugging the fund, in the sense it is what it is. The sector has underperformed recently, but otherwise a good sector, and it has all the things going for it. Right. And it is the biggest weight in our fund. So we are not randomly saying that it's a good sector.
Right. We'll talk about your financial services fund in a moment. We'll be curious to know more about it. That how are you playing it differently? But one particular stock out of the banks, HDFC Bank, does it start to look even more attractive now that all the other peers are up 10-15% higher, and this one has tested the patience for
It
the
was
longest time for
always
the largest?
we consider it a high confidence in reasonable return kind of stock, and actually it has one more thing going for it, which I think yesterday or day before yesterday again Macquarie pointed out, which I knew for some time since I'm tracking it, is that in this quarter, if the stock has been sold more by FIs, maybe after today they may not sell or because of unrelated events. But if HDFC Bank has been sold in this quarter, even 5 basis points, that means 0.05% total, then the stock will meet the MSCI requirement for coming into the index with full weight. And that itself is worth $5 to $6 billion of buying in a single stock, even if the bringing it into the index is done over, say, 6 months or 1 year, even if people know that over a year, the in 4 quarters like they did when removing it. So it has technical issues, plus it has underperformed, plus it is growing at least 12-13%, which half of Indian companies are not growing. If you look at the IT guys or the consumer guys, most of them are with great difficulty growing 8-10%. So it meets all the requirements now. We've always liked it. In general, it's always been good, except in the last 1-2 years, it's done sort of miserably, and therefore, but we haven't given up. We give up on many stocks we don't do well. It's not that we keep fighting the world, but this one we like.
Sure. You're just explaining the rationale at the current juncture. But Samir, what about the financial services universe beyond lenders? Are you researching and approaching them as well?
Financial sector has many components now. So, it has wealth management and NBFCs, and it has brokers, and it has stock exchanges. So one other thing that we are nervous about, and we now have very little, if you call some broker maybe, is the fact that there might be a clamp down on futures and options trading. And that I support. In the sense that they have to bring it down. We can't have this kind of speculation to this extent. But how the government can do it or SEBI can do it is, I guess, they can't ban it. So the only way they can do it is make it unattractive, rather either by increasing STT on it, or increasing margin, or making it available only for somebody who's called accredited investor or something. And that makes one part of the financial sector a little bit risky, which is these gatekeepers, which is basically the exchanges and brokers that rely a lot on options. Other than that, every part of a financial sector is good big picture, because there is a lot of under penetration of financial services in India. If you look at mortgages to how many households have, or penetration, or divide by GDP, or you look at credit cards, or you look at mutual funds. And in general, if you had looked at brokers, but this one angle is there, and banks, and then normal NBFC. So there are many parts to the financial sector beyond just the banks. But the banks themselves are very good, both private and public.
Do that.
And
But Samir, what's the view on Modi stocks? Are you of the camp that the glass is half full, that they've run up already, or is it half empty, that they have long runway to go in terms of PSUs, in terms of defense, manufacturing themes?
So we have all the PSUs that we can lay our hands on. Quite a few of them are weight in the larger diversified funds would be maybe 35%. We checked that in the mutual fund industry, at least, because it's not easy to get these on foreign funds. It's about highest is somebody in the 20s. So we are very high in that. And that is today's, like, we are raking it in. But I would think that this needs a bit of execution and delivery now. So now it will depend. All the PSUs cannot go up from here. I mean, unless they really do dramatic reforms and across the board things. So it will become tougher because the absolute valuations are high. But even today, we bought one PSU, by the way. But in general, I would think that now in this, even though we have large weightage and we will run with it for some time, now it will be important to see exactly what the government does on these things. So it is not as obvious as buying, say, 6-8 months ago on the basis that this thing will happen today, which is what has worked for us in our funds.
You got it so right with affluent consumption, right? Be it your call on Zomato around those 40 odd bucks, or for that matter, even ITC when the entire street was not ready to look at it, although ITC is more addiction than consumption. But you think, this aspirational Indian consumption stories or premiumization trend is here to stay?
It is here to stay, but it is more confusing than obvious stocks being there. For example, I think that the consumer staple guys, people say that there's no rural pickup and there's a divide between the rich and poor, and therefore these mass consumption things are not going. I think that one reason for that could be that those guys are also aspirational. So they are not as excited in buying a slightly higher quality soap or a higher quality noodle, because that they are consuming in their home, but they want to do something visible to the world. And that is why they may be spending on mobile phones or smartphones or Instagram or shoes or t-shirts that they can show on social media. So it's become quite confusing. So we have the consumer, but basically Zomato is not aspirational or something. It's more convenience related to the fact that people have more things to do now. Plus the traffic is a problem and you want to see Netflix, and there are so many unconnected things. Plus, of course, in its new avatar, it is a fight with the Kirana guys, and this is much more efficient, available for longer hours, and you can get more things. And the Kirana guy might also be able to deliver, but there is no downside in it being delivered from Blinkit or something. So I would say aspirational, and the premium consumer story is there. But the biggest story right now might be oil and gas and state-owned. As I said, it needs a little bit of policy reinforcement. But
just about to come to you on that one as well. Just some flashes coming on the screen. Vedanta Group is saying that they are aiming at becoming a net debt zero company, and now there are some special situations playing out in some other stocks like the Novelis listing as well in Hindalco. Have you approached this space, the entire metal and mining space?
So at least in the first case, we may do these things, but we do them in stocks that we otherwise would be willing to buy. Some stocks are considered untouchable because our history of our memory is long. And as you know, we keep saying that there are so many stocks that do well that we don't have to poke our head in every stock that is moving up, because some of the things we are broadly, principally against that these companies have done, or this company has done.
Right. No, that's true. I mean, there is a part of the market which is not very comfortable with so much of restructuring, demerger, merger, and then putting them back. And so they're confused what exactly is the business model here.
History. Not arguing.
Sure. Okay, I'll come back to that point, because now you are running a mutual fund yourself. You understand the economics of running a mutual fund. I mean, some of our friends in the industry say that the margin in this, always are under constant regulatory pressure. How would you see approaching, if one were to take part in, whether via the wealth management companies or mutual fund companies, which have better size and scale and scope of higher margins over the longer term?
Management is a better business simply because when we sell a mutual fund, the management fee is, as you can see from the difference between direct and regular class, that the wealth management firms keep more than half, 60% maybe of the fee, or even more sometimes. So, and they don't have the same regulatory issues. They don't need to keep risk officers and compliance officers and all that. So they are better off. But it's a good business to be in separately because of the fact that the size of the market is increasing so much. And ultimately, there are only 45 mutual fund companies. I think we are the 45th or 46th. And already by AUM in equities, we become some 38. So actually, there are only 45 companies. And some of them are doing very badly, and some of them are very big, so they don't have the same flexibility in terms of managing, like a $10 billion fund. How can you maneuver it so easily? So therefore, there is a sweet spot for the slightly smaller but otherwise equally experienced guys.
Samir, on that note, we let you go. Appreciate you making time and speaking with us. Hopefully tomorrow is another good day for the market and there's perhaps more upside. But for now, the upside has been fueled by Reliance Industries. That stock has hit a fresh record high as we speak. It's, I think, come off a bit from there, but nonetheless, that stock is higher by 5.5%. So there's a solid gain on that one, and that alone is contributing 135 points to the Nifty upside. Don't forget the kind of push coming in from SBI. That stock is up a solid 9%. Crossed the market capitalization of 8 lakh crore rupees. L&T, ICICI Bank, HDFC Bank, they're all batting for the bulls today.
Anisha, you know, the buzz on, I'll say in lighter vein, Reliance Industries stock had a major FOMO this morning.
Yeah, totally.
Because of course,
PSUs were clearly just outshining
after
it,
the
right?
Italian party and they came back and they saw
after the news that some other group actually came in the higher market cap. So they had to the stock had to do something. And look at that 5% move coming in, reversing bulk of that.
That's just fun.
Yeah,
It's
clearly.
not
Lighter vein, of course.
backed by facts.
Sure.
No, but nonetheless, everything is added to that BSE market capitalization, which is of course at record high level. 425 lakh crore is what it is nearing at. We're tracking that as well. But let's take a quick break while we can. When we come back, we'll take the discussion forward with Pankaj Murarka as to what they are doing at Renaissance Investment Management.
If you like this video, then like, share and subscribe to ET Now.